On the morning of October 24th, 1929, America woke up confused. The streets looked the same. The buildings still stood. The sun rose like it always did. But something invisible had snapped. Inside brokerage houses in New York, ticker machines screamed nonstop. Paper spilled onto the floor like confetti at a funeral. Brokers shouted orders that no longer mattered. Phone lines jammed, then went dead. By the end of that day, $14 billion had vanished, not stolen, not destroyed, simply erased. Families would spend years trying to understand what happened. Historians would write volumes. Economists would argue forever. But the real story doesn't begin on that Thursday. It begins earlier, quieter, with a man who genuinely believed he was helping America. His name was Charles Mitchell. To the public, he was Sunshine Charlie. He smiled easily. He spoke confidently. He looked like the kind of man you could trust with your future. Mitchell didn't grow up wealthy. He was born in 1877, the son of a Massachusetts farmer. No Wall Street dynasty, no inherited fortune, just ambition and discipline. He worked his way up methodically, mastering the language of finance and the psychology of people. By 1919, Mitchell had reached the top. He became president of National City Bank, the largest bank in the United States. Its assets were larger than the economies of most countries. Mitchell understood the power that came with this position. But more importantly, he believed that power carried a mission. He believed America was wasting potential. In the early 1920s, the stock market was not part of everyday American life. Less than 1% of the population owned stocks. Wall Street was distant, intimidating, reserved for the elite. Ordinary Americans saved money in banks. They bought government bonds. They trusted stability over risk. To Mitchell, this was a tragedy. He believed capitalism worked best when everyone participated. Why should wealth be reserved for the wealthy? Every American should be a capitalist, he said, not as a slogan, as a mission. Mitchell created a new subsidiary, National City Company. Its goal was revolutionary for its time. Sell stocks to ordinary Americans, directly inside bank branches. Now, when a schoolteacher from Ohio opened a savings account, she wasn't just offered interest, she was offered opportunity. Advertisements filled newspapers, posters filled bank lobbies. Smiling families stood in front of large homes. Children laughed beside shiny new cars. Invest just $15 a month. Become a partner in American industry. Mitchell understood something crucial. People don't buy stocks. They buy stories. And the story he sold was powerful. You weren't just working anymore. You were investing in yourself, in your family, in America. Then came the innovation that changed everything. Margin trading. The idea sounded simple. You didn't need $1,000 to buy $1,000 worth of stock. You needed $100. The bank would lend you the rest. Salespeople explained it with friendly math. If the stock goes up 20%, they said, you double your money. And for a while, it worked. Stocks rose. Profits appeared. Stories of success spread like wildfire. But what few understood was the hidden cost. This wasn't investing. It was leverage. And leverage turned small mistakes into disasters. By the mid-1920s, America was intoxicated. Factories expanded. Radios entered every home. Cars became symbols of freedom. Stocks only went up. A clerk became a paper millionaire. A chauffeur bought a mansion. A secretary wore fur coats. And Charles Mitchell became a hero. Magazines praised him as a visionary, a democratizer of finance. In modern dollars, he earned nearly $20 million a year. But beneath the celebration, the foundation was weakening. Nearly everything was built on borrowed money. By 1928, The stock market no longer reflected reality. Industrial production slowed. Car sales softened. Housing construction declined. But stock prices continued climbing. The Federal Reserve System noticed the imbalance. They issued a warning. Stop lending money for stock speculation. Markets dipped. Fear crept in. For a brief moment, reality threatened to return. In March 1929, Charles Mitchell stepped in front of reporters. He meant to reassure, to calm, to protect confidence. He said, "National City Bank will provide all the liquidity the market needs." The message was unmistakable. Don't worry, keep buying. This system will not fail. The market surged, and with that sentence, the final illusion was sealed. By the summer of 1929, something strange happened. Shoe shiners gave stock tips. Children invested pocket money. Taxi drivers debated which stocks would rise next. To some, this looked like democracy. To experienced investors, it looked like danger. Quietly, without headlines, large institutions began selling. They understood the math. When most money in the market is borrowed, even a small decline becomes fatal. One famous investor later said, "When the shoe shiner started giving me advice, I knew it was time to sell." On October 24, 1929, selling began. At first, slowly. Then all at once. Prices slipped. Margin calls followed. People didn't have cash. They sold stocks instead. That pushed prices lower, which triggered more margin calls. Banks froze. Phones collapsed. By October 29th, Black Tuesday $14 billion were gone. More than America spent fighting World War I. Numbers don't cry. People do. A mechanic in Detroit invested his life savings in Ford stock. By November, it was nearly worthless. The bank demanded more money. He hanged himself in his garage. A teacher in Ohio mortgaged her parents' home to buy Radio Corporation stock. After the crash, the bank took the house. 3 generations were left homeless. Bridges filled with silent figures staring into the water. America had not just lost money. It had lost trust. In 1933, Charles Mitchell stood before Congress. When asked if he felt responsible, he said, "No one forced them to buy stocks." Later that year, he was convicted of tax evasion, disgraced. The man once celebrated as a savior became a symbol of greed. He spent the rest of his life in quiet obscurity, never publicly admitting fault. America rewrote its rules. Banks were separated from speculation. Regulators were created. Deposits were insured. The goal was simple. Never again allow dreams to be financed with borrowed illusion. Today, millions trade stocks from their phones. Zero commissions, easy leverage, borrowed money, different technology, same psychology. Charles Mitchell believed he was helping America get rich. Instead, his system destroyed the financial future of an entire generation. History doesn't repeat, but it rhymes. And the next time someone promises easy money, remember Sunshine Charlie.